Would you invest in energy now? Against the backdrop of recessionary pressures and concern about demand, where are we finding opportunities in energy equities and fixed income? This is a conversation well worth your 10 minutes, right now on UBS Trending. Hi everyone, and welcome to UBS Trending. I'm your guest host, Amantia Mohedini, and I'm joined today by Jay and Alina. So let's get right into this very interesting conversation. We talked about the backdrop of energy markets, global recessionary pressures. Jay, let's start with you. Give us some more of this backdrop on energy, and more importantly, what's our outlook going forward?
Yeah, I mean, Amantia, it's a great question. Looking just at supply and demand, we just look globally and we see demand continuing to grow. We can look at population growth, we can look at recovery from COVID. We've got some economic concerns in the developed world, but when we look at the developing world, demand continues to grow.
Interesting. So how are you measuring this? What does it mean for oil prices?
Yeah, when you look at energy, there's lots of ways to measure. We can look at electricity, we can look at natural gas. Oil is, to your point, an easy way only because the data is reasonably transparent on a global basis. Not perfectly transparent, which makes my job interesting, but reasonably transparent. And what we do see is demand growing. It's slowing a little bit in the developed world, but in the developing world, particularly Asia, we're seeing good growth there. So it's a really interesting time, particularly when you put that sort of right next to the supply side. The supply side we've not invested a lot in. So you've got growing demand amidst sort of stagnant supply. And that, I think, sets a reasonably good backdrop.
Yeah, very interesting. And I want to come back to you, Jay, to talk a little bit about what does this actually mean for the companies that we invest in. But before going to the companies on the equity side, Alina, let's bring you in the conversation. Let's talk about fixed income. Jay talked about this outlook and oil demand, but it's not only everything about oil prices, right? What are you seeing in the fixed income space?
Well, the number one important thing for fixed income investors is stability. And what Jay just described really speaks about stability of oil prices. So that sets up a positive backdrop for energy fixed income investors in general. Now, we particularly like the midstream and the MLP space. And the reason is that these companies have spent the last 2 years cleaning up their balance sheets. They've reduced debt. They are generating positive free cash flow. And they've improved their credit quality.
Very interesting. And I think as you're talking about credit quality, I think we have a chart that we can queue up here as you're looking at spreads and how kind of what they can give us as investors, right?
That's exactly right. Because when you look at valuation on these companies, they actually still trade wide. If you look at high yield midstream index, it's about 50 basis points wider than the E&P index. Yeah, if you look at the BBB index, the midstream index in investment grade actually trades 10 basis points wider than the BBB index.
Very interesting. So you started, I think, going into some of the reasons, but tell us a little more. What explains the spread that you're finding?
So the spread difference, I think, really is historical. Remember, these companies used to be extremely highly levered. They used to spend so much money on CapEx. They used to pay everything in dividends. And really, there were serial issuers in the debt market. Now, that has changed, but the valuation hasn't fully adjusted yet. And one more point on MLPs is that the revenue side is actually a lot more stable than people think. We all remember COVID?
Yeah. It's a terrible time for energy.
2020 was horrible for energy, and yet the subsector of companies that we follow, their EBITDA only fell by about 8% in 2020.
Wow. Yep. Doesn't compare with the broader sector, right? Yeah.
Correct.
Yeah, very interesting. So, I think we should really kind of think about this idea that for credit investors, stability is really what matters. Now, for equity investors, Jay, what are you seeing? Where are the opportunities?
Yeah, I mean, as I said, it's sort of a backdrop. I think it's a reasonably constructive environment. Now, when we set the table for energy, we have a neutral view currently, but that's really within the context of a diversified equity portfolio in the next sort of 6 to 9 months. When we really look out what I think is a more realistic 12 to 18-month period, like Alina was on the fixed income side, I think the sort of investment opportunity is pretty interesting. As we said, we've got supply that needs to grow, so investment that needs needs to occur. We have demand growing, as Alina said, provide some stability for oil prices. True would also be of natural gas prices. But then you say these companies are running very positive free cash flow. They are using that capital to give returns back to investors, dividends, share repurchases. I'd say the environment's pretty attractive from an equity investment point of view.
All right, so within the sector, we still are positive on those companies.
Yeah, exactly, and I would even go further. You can sort of segregate the energy into sort of the MLPs, the E&Ps, and maybe even the integrateds. And as Alina pointed out, the midstream operators are some of the best performers year to date and are sort of missing a little bit of the volatility we've seen in the broader market. I think there's opportunity there, but I also think MLPs really are a part of a diverse, equity portfolio within the context of energy. They're really not their own investment. They're a part of your energy investment, if you will.
Right, and I mean, this is consistent in how we speak about any sector, that it has to be in the context of a fully diversified portfolio. You can't just buy companies or even sectors just in an ad hoc and then not think about consequences. Now, speaking of consequences, Jay, I think you said 6 to 9 months, which is the time frame. What if we take a longer time frame here a little bit for a second and talk about the elephant in the room, the conversation we always have, certainly the three of us, definitely in this room here, about the energy transition. Broad conversation around us shifting over time to lower carbon energy sources. What does this mean for our outlook here, just broadly in energy? We'll start with you, Jay, and then curious for your thoughts, Alina.
Yeah, I mean, it's really interesting. We get asked this question a lot. The first thing I say is we're going to be using oil and gas for a long period of time. So I don't think this is a challenge to equity securities in a 5 or 10-year period, as regards energy. But to your point, we are in a period where we're looking to reduce the amount of carbon emissions that we have or emit. And I think therein lies the opportunity, sort of an all of the above. But the challenge, I think, and you and I have talked a lot about this, within what we learned in Europe. We learned that sustainability, decarbonization is very, very important, but so is reliability, and perhaps as importantly is affordability. So it really made me convinced the energy transition is accelerating. We as human beings should feel really, really good, but this is going to be a really rocky road, and we should never lose sight of reliability, affordability, and sustainability as sort of a three-legged stool that falls over if one of those legs.
Yeah, absolutely. Energy, rad, right?
Yeah, exactly. Rad or raz, but yes.
Now, what time horizon is important. Again, we're saying this is our view for 6 to 9 months, then you're talking about the 5 to 10-year transition. Often when we talk about those decarbonization objectives, we're looking to 2030. So that's an even further time horizon that we all should keep in mind here as we think of investments and shifting capital and inflection points.
Sure, and even further, really. Yeah. I mean, it can be multiple decades. Yeah. You figure the president's talking about net zero 2050, which we're not on track for, but it makes multiple decades.
Well, the future is rolling forward. So, so Alina, where are we rolling to? Where are you seeing kind of these transition opportunities or ideas start to emerge?
Yeah, well, so if I play off what Jay just said, which is really that we're going to need fossil fuels for many years to come. In that scenario, for midstream companies, their assets are going to be in demand for many years to come. Now, a lot of the companies that we focus on actually transport or process natural gas and natural gas liquids. And it is widely expected that natural gas is going to be part of the transition. But besides that, a lot of these companies are actually investing in growth opportunities in the clean energy space. So they are looking into transporting things like CO2 and ammonia and renewable diesel, among other clean energies. Now, they're also looking into investing in carbon capture technologies. So we very much think, actually, that the midstream companies will be part of the energy transition going forward many years down the line.
Yeah, no, makes sense.
One thing I'd add to that, and I think this is misunderstood, is permitting these pipelines, new pipelines, is just so incredibly difficult in this country. And it doesn't make a difference where you are. It's a little easier in Texas and Oklahoma, really difficult in New England. But to Alina's point, this infrastructure is going to be needed for a long time, and it's really, really hard, maybe bordering on impossible to replicate. We like assets that are really hard to replicate and that are going to be used for a very, very long time. It creates great barriers to entry and the definition of predictable cash flows.
Look, we left this conversation of the energy transition to the end. Our focus here was on the present, but I think we'll come back for a discussion on the future. And with that, that's all we have time for today. So thank you guys for joining me, and thank you for being with us. Now, for more information, visit ubs.com/views. And make sure to follow UBS Studios on our newly relaunched UBS Trending Instagram channel. Great content, sound bites, and other information for you. And as always, if you have any questions about your portfolio, please speak with a financial advisor. Until next time, I'm Amantia Muhedini. Have a great rest of the day, and remember to keep your eyes on what's trending.